2.6 million Americans just had their student loans transferred to default in a single quarter. Not over a year. 1 quarter. And most of them were not reckless borrowers. The average defaulted borrower is 39 years old. They were current on their loans before the pandemic pause began. They followed the rules, and the rules changed on them. Here is what default actually means for your life. Your credit score drops an average of 91 points the moment you default. That is not a small dip. That is the difference between qualifying for a mortgage and getting rejected. Between a 6% interest rate and an 11% one. Between financial progress and financial paralysis. And it gets worse. When federal student loan collections resume, the government does not need a court order to collect. They can garnish your wages directly from your paycheck. They can seize your tax refund before it ever hits your bank account. They can offset your social security benefits in retirement. The federal government is the one lender in the world you cannot negotiate away from. So, how did we get here? During the pandemic, the government paused all federal student loan payments. For 3 years, millions of borrowers adjusted their budgets around not having that payment. Then repayment resumed, and for millions of people that monthly payment simply did not fit anymore. Rent is up, groceries are up, car insurance is up. And now a student loan payment that was manageable in 2019 is the straw that breaks everything in 2026. Here is what you need to know if you or someone you know is close to defaulting. Income-driven repayment plans exist for a reason. If your payment is unaffordable, you can apply to have it recalculated based on what you actually earn. Some plans cap your payment at $0 if your income is low enough. Public service loan forgiveness is still active. If you work for a government agency or non-profit for 10 years, your remaining balance gets wiped. Most people who qualify have no idea they qualify. And if you have already defaulted, the Fresh Start program has allowed borrowers to return to good standing without the usual rehabilitation hoops. But that window will not stay open forever. The student loan crisis is not a story about irresponsible people making bad decisions. It is a story about a system that sold millions of people a promise that a degree equals a good job equals financial security, and then quietly changed the terms while they were not looking. The bill has been coming for a long time. For 2.6 million people. This quarter, it finally arrived. If you are carrying student loans right now, do not wait for the situation to get worse before you look at your options. The programs exist. Most people just never look for them. Subscribe to Money Logic for weekly videos on personal finance, investing, and building real wealth. Drop a comment below. Are you carrying student loan debt right now, and how is it affecting your financial life? Until next time, stay disciplined, keep building.